listeners, welcome back to Almus Market Mornings with Shikhar Garg, and we begin with a fresh week. And this week again has a lot of macro updates in the lineup, ready to hit the financial markets, although not as much as we had the last week. Last week we had the Fed pausing their rates for the current session, but China was seen cutting the key interest rates by 10 basis points, ECB hiking, and India staying put. Now, this week we have the Bank of England in the lineup, along with the UK and Japanese inflation data to be released. Japanese yen, on that matter, has also been weakening quite strongly. Weakening quite a lot. A lot of antitheses in the statements. But JK, what do you think? What should we be expecting out of this market scenarios?
Yeah, good morning, Shikhar. So Friday was one of the quieter days in terms of economic data, particularly in Europe and the US session. However, the Bank of Japan's no change in policy decision had served as a reason enough for market to sell more of yen and buy high-yielding currencies and risky assets. In other words, we have seen re-emergence of yen carry trades once again, and we see the yen weakening vis-a-vis strength in other currencies, more particularly the euro and GBP, where the central banks are certain to hike more. And in fact, during the week, yen against the euro lost 3.7%, or I would put it as euro gains 3.7% against the yen, which is the 15-year high. GBP 3.85% gain, Aussie nearly 4% gain, and carry 2%. Even INR gained 2% against the yen. This shows the extent of carry trades that's happened. Further evidence of this popular trade was the global composite index of stocks gaining 2.66%, and Japanese Nikkei itself gained 4.7%. All this happening in just 1 week. Now we are in a real risk-on scenario for the markets, at least till last Friday. Although the small profit taking was seen in US markets week on week, we have had handsome gains for the indices there as well. Now the reasons for this change in investor sentiment is the absence of any major challenge for the markets after the debt deal has been signed, inflation easing across economies, Chinese easing rates, with a stimulus on the card possibly, and Fed pause serving as the trigger for these moves as well. And finally, BOJ standing pat on their policy rates, on an easy path. So that perfect setting for yen carry trade. The trend is likely to continue until we see Japanese authorities getting serious about sustained weakness of the yen, where so far we have only seen some verbal statements. Actually, Japanese central bank has almost given this green signal for this trade with its decision, notwithstanding indications that growth is good and the inflation is twice the target set by the bank. The only data from US was Michigan Consumer Survey, details of which were good all around. Overall index of consumer sentiment came in at a 4-month high of 63.9 in June, compared with 59.2 in May. The resolution of debt ceiling statement seems to have improved the sentiment. Now, the consumer inflation expectations, more importantly, dropped to 3.3% from 4.2% in May for 1 year, and for the 5-year, the outlook dipped to 3% from 3.1%. With large influences coming from the drop in fuel prices and also the moderation that we saw in the inflation in the previous months. The survey results, particularly the inflation expectations dropping, should be good news for the Fed, who went on a pause in June but kept the July options open. For the economy, improvement means that they will maintain the spending, the US consumers, particularly with the inflation slowing. Fed speakers Barkin, Waller, and Goolsbee were all hawkish in their statements, indicating Fed is not done with rate hikes. But market seems to be not buying what Fed is trying to sell, and sold dollars, whose index has nearly lost 1.2% during the week. Recovery in US Treasury yields did not seem to deter the sellers of greenback. Now, Fed also released in advance the semi-annual monetary policy report ahead of congressional testimonies by Fed Chair Powell this week, in which it noted it will make future decisions on interest rates on a meeting-to-meeting basis, and that higher credit conditions are likely to weigh on the economy, and the period of below-trend growth is more likely, and that will curb inflation. Now, all of this, how does it look for rupee? Rupee is in a different setting, because the central bank still influences the rate to a great extent. And we did fall to important support at 81.90, but despite selling seen throughout the day on Friday, the level did not break sustainably. We did see 81.87 being traded, but then it closed higher again. And indications are that it may see slight higher level once again today. But does it mean that we're done with the downside? I doubt very much, because we are hearing of more flows in the pipeline. Dollar index is weakening. Chinese yuan is recovering. Indian growth story, etc., is still quite vibrant, and we're hearing more and more big voices favoring Indian investment. So it may be a small lull period for the rupee, but I think if we do get uptick to 80 to 10, 15 areas, even the flow guys will come and dump the dollars. So I think there are good chances to see at least 81.60, and depending on what the policy central bank wants to see, wants to pursue, we might see even more on the downside. However, on the negative side, we have this monsoon, which is 47% below normal so far, and that may be some concern for the inflation going forward, as well as the rural consumption demand. So we have a holiday in the US today, so we will probably be either quiet, or maybe downside probes may be there because of lack of cash demand. Thank you.
Okay, JK, that was quite good. And yes, folks, the emergence of yen carry trades led to quite significant moves in the financial markets. And as JK mentioned, we are seeing quite interesting, levels being broken. I think we've seen the Euro JPY high, which was last seen 15 years ago. We have broken CHF JPY high of 44 years now. These are the kind of actions that we have observed in the financial markets. And to talk about consumer sentiments, it's kind of mixed across the board. I mean, with respect to consumer sentiments, if we have to talk about China, they are having some difference in opinion with the long set beliefs of having home as a wealth asset. They have their thoughts being changed over there. But if we have to talk about India has been sharing a lot of positive macro updates, and one of the very strong performing economies. But at the same time, concerns over the monsoon can be the reason for another onset of inflation. So it needs to be seen how things go about. But all said and done, the Indian currency had shown some strength in the last week, and it needs to be seen whether this continues, and if there is any presence of the central bank to negate any moves or support any moves in the financial markets. That's it for today, folks, and we shall come back again tomorrow with another round of updates. Thank you so much for listening.